The anatomy of a candlestick can tell us a lot about what happened during that time period and help us to predict how a price will move in the near future. Let's have a look at the different parts of candlesticks and what they tell us about the market. The bodies of candlesticks give us an indicator of the strength of buying and selling pressure at a given time period. Long bodies are an indicator of strong buying and selling pressure. This means that in the market, either buyers or sellers took control of the market and therefore were much stronger. Just remember, the longer the body, the stronger the buying or selling pressure in the market. Referring to the above example, a long white candlestick indicates strong buying pressure. As you can see, the close is much further above the open. This indicates that buyers were highly aggressive and forced prices up much higher than when the market opened. In contrast, a long black candlestick indicates strong selling pressure, where sellers were more aggressive and forced prices down. Thus, this results in the close being much further below the open. Short bodies, on the other hand, are an indicator of weak buying and selling pressure. This means that in the market there was little buying or selling activity. Remember, the shorter the body is, the weaker the buying or selling pressure in the market. As you can see above, a short white candlestick indicates weak buying pressure. The close is not much further above the open, meaning buyers were not very aggressive and did not bring prices up considerably. In contrast, a short black candlestick indicates weak selling pressure. The close is not much further below the open, meaning sellers were not very aggressive and did not force prices down considerably. Recall that the top of the upper shadow indicates the high price of the session, while the bottom of the lower shadow indicates the low price of the session. Hence, we can see that the length of these shadows highlight whether most of the trading action occurred close to or further away from the open and close. We can view the upper and lower shadows in relation to each other in order to draw conclusions about what happened during the time period of that particular trading session. For example, if the candlestick shows a long upper and short lower shadow, it says to us that buyers were able to bid prices higher in the session and force the price up. However, sellers were able to enter and force the price back down again. On the other hand, if the candlestick has a long lower and short upper shadow instead, it reveals that the sellers were initially able to bid prices lower in the session, but buyers were able to force it back up in the end. If this helped you understand better the topic, make sure to like, subscribe, and hit the notification bell so you don't miss the next video.